2,000% gain in a week. HKD running from $12 to $400. Would you like to know more about how to make money participating with the IPO Attack Club? I'm going to be talking about some of these tickers that have run up 150 to 2,000% in just a week. And I'm going to be talking with you about my unique perspective on these plays and my unique due diligence, what I can bring to the table on these for you. Let's get right into the information. I am Tony Denaro, and on my channel I focus on value investing in a risk-balanced portfolio, but we also love momentum trades. We get up every morning in pre-market and talk about what is going to be the trades of the day. And knowing what ticker symbols that the retail traders are focusing on that day is critical to be able to get in early, make that money, and get out. When you're doing momentum trading, it's not critical to know a lot about these specific companies. After all, you're just playing the momentum. You're typically going to be in and out. However, if you're going to be playing them for a matter of days, if you're not a qualified day trader, it is also important to understand what is driving these companies up. Is it good due diligence? Is it bad due diligence? And like one of our friends said on the Discord, Tony, sometimes it doesn't matter if you're right, it just matters if you're first. And I love that saying. Since I don't know what your specific qualifications are in terms of being a qualified day trader, I don't know how much I'm going to be talking about these specific tickers on videos, but I want to give a shout out to my man Teddy Zane. He does talk about many of these tickers, so check out his channel. What I'm going to be doing is focusing with my group also in playing these plays, but we're going to be diving into the due diligence so we know the appropriate time to get in and get out of these plays. There's a lot of misinformation going around on Twitter, Reddit, StockTwits, Webull, what have you. Completely wrong information about why to jump in these plays. Getty, for example, ticker symbol GETY. People are making assumptions about the redemption rate and the SPAC merger process, thinking that the float is only 513,000 shares. You know what, guys? At the end of the day, it doesn't really matter if everybody has the due diligence wrong. What really matters is they believe that bad due diligence and they jump in the play and drive the price up. The price isn't being driven up because of a short squeeze. The price is being driven up because retail is piling into the play. And you can use that information to your advantage if you recognize these plays early and get in and then get out. What I don't want to see you doing is FOMOing in on these plays after they've already been running for days, because a big drop is always coming on them. And by the same token, holding these plays for days, expecting them to run up to ridiculously high levels only works out maybe 1 in 100 times. HKD was a great example. $12 to $400. Fabulous movement in that stock. So if you get in early on these plays, identify them early, get in and get out. Some of them are going to pay off 100%, 150%. Some of them occasionally are going to have massive run-ups like HKD. Just as a bit of a sobering reminder, I'm going to throw up a couple from 2021 that many of you might have participated in and show you what can happen on these plays as far as potential if you get in early, but also what happens if you hold them too long. I know if you're a momentum trader, you already know this, but I'm speaking right now to the people who maybe are just discovering these type of plays. You need to understand what can happen on both the upside and the downside so you don't get burned. The only thing we care about on this channel is helping you make money, but not being a bag holder. No one likes to be a bag holder, and you need to have a source like this channel to make sure you understand what is driving these plays up and have realistic price targets. Many of these plays that we're going to be talking about are SPACs, which are completing the merger process, the IBC, initial business combination, where they go from $10 a share to whatever the market will bear with the new ticker symbol after the merger of the SPAC is complete. There is, I think, a misunderstanding in the social media circles about what happens with the redemption of shares when a SPAC goes through the merger process, and people think that a short squeeze is going to happen. Maybe we'll talk about that in another video. Maybe I'll get a professor on to explain it to you guys. But at the end of the day, it's really irrelevant, because if enough people believe it's true and they pile in and drive the stock price on, that is something we can capitalize on. The people who don't know what's happening, just jumping in and driving the price up, you can always make money on FOMO from people who don't understand what's going on. My intention is to give you the inside information from a seasoned investor to understand the real due diligence behind these plays and give you that extra edge. Okay, so let's talk about a couple of examples from 2021 so you can see what the upside potential is and then the downside. The list is literally endless. I've picked just a couple to highlight to you what the potential is and why you need to be able to get in and get out. The first one, IRNT, IRNT. Remember, it was a SPAC priced at $10. Then it went public after the merger. It ran up in the first week to about $27. Took a dip down and then ran up to $47 the next week. If you are not a seasoned momentum trader, you need to learn how to recognize the signals of when these plays are topping out. And you need to have more sources that you're listening to besides the ones that are telling you that this play is going to $100,000. And that is one thing that we are particularly good at here on this YouTube channel and in our Discord, a realistic, seasoned, and reasoned approach to playing these momentum plays and recognizing when they're topping out. Get in, get out, make your money. Don't be a bag holder. OfferPad, ticker OPAD, is another example from 2021 of one of these SPAC merger completions that people thought was going to be a short squeeze. It ran up from $10 to $21 in a matter of a week, and then in one day, all of that fell. And now that stock is currently trading at $2.11. Again, why were these stocks running up in 2021? Well, for the same reason we're seeing stocks run up right here, right now, today in 2022. People have a misconception about what redemption of SPAC shares means post-merger, and they think that the float of these stocks is very, very small. That is not the case. But it really doesn't matter if you're playing it for momentum. Let them have the misinformation. If they're willing to pile into these stocks on misinformation and you know the real deal, you can still get in and make money on that misinformation. Just participate in the FOMO early and get out before they realize that they had bad information and that big red candle happens. Some of these plays for next week, like ticker MAIA, are new IPOs, and they are a low float stock. This is different than the SPAC situation, and there are opportunities for retail to drive these prices up if a bunch of people come in and buy it all at the same time. In those small float IPO stocks, there isn't really any particular bad misinformation going on. These are different situation than the SPAC squeeze theory. And if retail piles into these stocks, you definitely can drive them up because of the very small float. Again, that is part of the due diligence that we do here on this channel, reading all of the SEC filings so we know exactly what we're dealing with, because the difference between one and the other, the SPAC and the small float IPOs, is a world of difference. Always keep in mind, these sort of plays are speculation. They are very risky. I do not recommend that you put your entire portfolio into any one of these plays. If you are new to momentum trading, it's important that you only allocate a small percentage of your portfolio to any one particular play. That way, if it goes wrong, your entire portfolio is not zeroed out on one play. You don't want to be taking losses of 20, 40, 50, 60%, sometimes in a matter of minutes when that big red candle happens, if all of your money, your entire portfolio, is tied up into one play. Play it smart. But if you want to follow some of the ones that are potentially going to be in play next week, some of the ticker symbols that we are going to be watching are GETY, MGAM, and MAIA. I'm not making any specific recommendations on these tickers. I do think that they have high potential to have a run up next week if retail gets behind them. So they're worth keeping an eye on in pre-market. And once the market opens, pay attention to the pricing, pay attention to the volume. And I also recommend, if you're trading during market hours, that you have trailing stop losses on these tickers so that when that big red candle happens, you have protection on the downside. If it bounces, you can always re-enter the trade if you are a qualified day trader. Another trick is to have multiple accounts at different brokers so that you don't fall into that pattern day trading rule with one particular broker. If you don't know what the pattern day trading rule is, make sure you read up on that so you know what your limit is of day trades in any rolling week. There are a lot of rules and potential gotchas on day traders if your account is less than $25,000. So if you think that a video explaining the ins and outs of all of this might be useful to you, let me know down in the comments below, and I'd be happy to do a video on how to day trade if you have less than $25,000. I hope you keep an eye on those tickers that I called out so that you can see how they perform next week. There are no guarantees. Maybe if this is your first time, just think about paper trading them in your imagination and see how you do. Remember, as always, that the due diligence on many of these tickers that I just gave you that is being passed around on social media is not correct. So there are no guarantees on what is going to happen. They could really run up. And if you are a momentum trader, that is what we are looking for. But they also will have a swift fall when the momentum runs out. Again, I am Tony Denaro. I want to thank you for watching. If you got value out of today's video, hit that like button for the YouTube algorithm. Join me on a live stream during the week where I answer your questions on stocks, options, and crypto. No super chats required. I hope to see you on one of those live streams at a future date. Don't forget to buy and hold that subscribe button if this is your first time here, and I will see you on the next video.
You're talking like you think you're royalty. You think that I'm afraid.